Hi, my name is Cheryl Jeffers, and I am the Executive Director and founder of CARE, Cincinnati Aging Resource Experts. We are a group of business professionals who help families and their loved ones navigate what the next step is and also help them with their plan. We do that by providing free resources and answering your questions that you have in regards to how do we make our next steps in aging, how do we navigate that, and we will help you do that. We also provide education. We are having an educational event today, and you can visit our website at cincycare.com. You can find all the information on CARE on that website. And today I would like to introduce Mike Bowers with Mutual of Omaha Mortgage. And he is going to present today on lifestyle home loans. Mike?
Thank you, Cheryl. It's good to be with a group of people who are my similar age and demeanor. As you can tell, I are a boomer. The people that I have represented since 2003 are those ladies and gentlemen who were considered to be boomers. Those are folks born in 1946 through 1964. And there are some 80 million of us that meet this definition. And the first thing I wanted to call to your attention is that when you are in the retirement phase of your life, over 1/3 of your retirement income goes to control the cost of housing. So what we do at Mutual of Omaha Mortgage is we help people to make better financial decisions by giving them multiple options of how they're going to age in place with the respect and dignity that we all want. So that's what we're going to talk about today, and the first thing we always talk about is laying a foundation. So we're going to take a closer look at what is called the HECM programs. This program has been around for 34 years. It was created by the 100th Congress and signed into law by President Ronald Reagan. One of the things that we need to remember is that it's nothing more and it's nothing less than a residential program for a special group of people. And if we were to sit to the table with Gary and I, who you'll meet later this morning, you're going to sign a mortgage deed and a financing note. The home will be recorded in your name in the county in which you reside. You can put it into a living trust. You can give it to the church or charity. You can do anything tomorrow with this mortgage for seniors that you can do with your home today. It's important to understand that way back in 1965, HUD was created. And the whole purpose of HUD was to create special residential lending programs for special groups of people. Let's think about those men and women who honorably served in the armed forces, were discharged. The federal government will give them 100% financing and give them 3% for the closing cost for having honorably served in our armed forces. If you happen to live in rural America, you can get a USDA loan. In my previous life, I've had special loan programs for policemen, for firemen, and for teachers. So back in 1987, HUD went before Congress and said, let's get our arm around a mortgage program that will meet the current and future needs of some 80 million people who meet the definition of boomer. The word reverse mortgage was never part of that legal piece of legislation. The true name for the program is HECM, Home Equity Conversion Mortgage. People always say, well, Mike, why did the federal government see the need to create this program? Well, as we say in the Deep South, Uncle Sam's got a dog in the fight. If you were to retire this year at age 65, statistically, looking at longevity, you could live another 18 to 25 years. And as we all know, that's a very long time to hold your breath when you're on a fixed income lately, as we have all experienced, inflation's running 8, 9, or 10%, depending who's keeping score. Cost of housing is up. Interest rates are coming back to where they historically have been, close to 6 to 7%. So the ladies, you have a chance of living to 93. And for all of us who have kept our head down, worked hard, raised our families, 2/3 of our net worth across America is tied up in our home. Our government needs every one of our seniors to be in their own home. We don't have enough beds, doctors, nurses, nor caregivers to look after 80 million people. And it may come as a surprise to you, but so does Canada, UK, Australia, even China and South Korea have programs to meet the housing needs of their senior population. And as we all know from our family experiences and that of friends and neighbors, it'll cost at a minimum $10,000 to $12,000 per month to be in a skilled nursing facility. Oh, and oh yes, that doesn't cover the doctor, pharmacy, OT, or PT. So the history of the mortgage is that we needed this tool, this mortgage tool, to allow people to retire in their own homes with the respect and dignity that we all want. So what I want to share with you here is that over the last 34 years, there have been many, many changes to the program, many of which were necessary. If you look back in 1990, we had over 100 major insurance companies that were offering long-term care. Today, there are about 9 or 10 major insurance companies offering those policies. What happened to the other bunch of folks? They horribly misjudged longevity. They were collecting a premium to provide long-term care to our seniors who were supposed to be only using that benefit for 2 or 3 years. When they lived to be 5, 7, and 9 years, there was no efficacy within that policy to continue it. And so many of those people got out. So what happened? They misjudged longevity, the health, vitality of the senior population. So what's happened over the years is we have actually adjusted the longevity factors, and we've improved the financial assessment that allows some folks to qualify for this program. When it first started, if you were a senior citizen and you had equity in your home, you could literally take all of that money out. Today, that is not the case. They limit the first year distribution to about 60%. You can get the balance after the 13th month. Particularly, I'd like to call your attention to this slide. If you can see it here, it's actually put out by the United States Department of HUD/FHA. If you look at the glide angle of that chart, you can see that since 2015, the net new delinquencies has been practically zero. Simply because we have gotten the actuarial numbers correct, and we have a financial assessment that will make sure that over the next 18 to 25 years, mom and dad, senior citizens will be able to pay the real estate tax, keep the home insured, and maintain it. So I'm a kind of a guy, being a banker for 40 years, show me the data. Let me understand how this works and how it benefits me. It may come as a surprise, but most of our referrals will come from financial advisors. These are the men and women getting that phone call, send more money. People are upset about the volatility of their retirement account. They're concerned about rising inflation and how far their money will go each month. So as a consequence, what we know today, because of the absolute shortage of available housing, if you can see over here, green has green in money. Seniors are sitting on some $14 trillion of locked up equity. Equity that they could monetize and put to use to live more comfortably day to day. Now, this is one of my slides. I show you the ones that come from the government and different authoritarian sources. But what I know, having been a banker for all these years, that many of the clients that I sit with may have retired too soon, saved too little because they were working hard raising their families, And oh my gosh, we're living too long. You see the horns of that dilemma? That's a Texas Longhorn steer. Another way that I try to explain this is on the right-hand side of that slide. You know what? When you retire and you don't have that monthly income coming in from salary, commissions, or however you earned your income, it's a whole lot like being unemployed for the next 18 to 25 years. You have to live on what you've been able to put aside and save. And the HECM, the home equity conversion mortgage, is for thousands and thousands of people that secret solution to allow them to retire with the respect and dignity that we all want. I think, based on my experience, many people tend to think that this program is for the poor, the halt, the lame, the blind, people that can't make it go. The truth of the matter is that 37% of the people that have used this program are what we would consider high income and high net worth people. 44% of our clients are what we consider here in the Midwest the middle class affluent. Only 18% are those people that unfortunately have too much month and not enough money. That makes about 83% of the people are middle class or high income because they are the men and women who understand a balance sheet, profit and loss, and most importantly, they understand cash flow. The amount of money needed to pay your bills and live more comfortably. This slide is back from 2020 and haven't things changed in the last 2 years. The average home in America right now is $458,000, so roughly half of that would be the loanable amount. The average credit score has not changed. The median age has not changed for us here in the Midwest. My average client is somewhere between 72 and 74. Those are the people that have been retired just long enough to know it's starting to squeeze, it's starting to hurt. And what we tell you and would tell the financial advisors, if there were a program available that would increase their monthly cash flow because they're not having a mortgage each month to pay, and number two, it would reduce their market risk, and we'll talk about that in just a minute. Because they're not making a mortgage payment, it preserves their retirement assets. They're not pulling money out each month, paying tax, federal, state, and I pay a local Cincinnati tax in order to make that mortgage payment, or to have enough money to live comfortably. When people can use the home to purchase a home, like Gary and I have done for folks, they don't need to put but half of that money from the departure home as a down payment to buy the new one, and they have money to give back to the financial advisor or to buy an annuity or to put money in a CD or to make investments to do what? To generate additional monthly income. Retirement, again, is about one thing and one thing only, and that's cash flow. I think before we can make intelligent financial decisions, we have to get rid of what I call the FUD factor. That's fear, uncertainty, and doubt. And one of the things that plagues our country right now, and I'm on a soapbox here, is not only misinformation, things that aren't exactly accurately portrayed, versus the folks that are creating disinformation, purposely skewing. It could be politics, it could be government, it could be any number of things. And what we as individuals must do is learn to accept, adapt, and learn what we have before us in order to make better financial decisions. And being locked in locked place, not being able to think and move forward and analyze, just isn't to our mutual benefit in order to achieve that perfect retirement. The challenge, this came out of a survey it's called a retirement income survey. They surveyed 71% of advisors said that the biggest challenge to generate sufficient income for ever longer periods of retirement, 18 to 25 years, is a combination of three factors. Ladies and gentlemen, we've had 12 to 14 years of compressed fiscal and monetary policy. the federal government put the Fed funds rate, what we charge other banks, at 0 to 0.25%, which means when we put our money into a CD or a money market or investment, we were lucky to get 1 3/4 to 2.5. That's fully taxable. And inflation's running back then about 3 to 4. Today it's running closer to 8, 9, and 10. So you have to have adequate exposure to equities, which is stocks, in order to manage that volatility. And I can tell you this from absolute hands-on experience, retirement never goes according to plan. I call those MLEs, major life events. And none of those are pleasant, and they are very most certainly not planned on. But again, retire too soon, save too little, live too long, carrying mortgage debt into retirement. Canada has a program called the Pension Release Program. Very simply put, they don't want people pulling money out of their retirement account to make a mortgage payment. Because when they're out of money, they become a ward of the national government. Britain, I just read this morning that inflation in Britain was quoted at 11.4%. Their use of the HECM program, or their version of the HECM program, was up 37% last year. Western Europe, whether it's Spain, Portugal, Western Europe, have all experienced tremendous senior growth, and they're dealing with that by having their own program. In Australia, bless their hearts, they call it the opposite program. China, January 1st of 2017, the National Communist Government of China appointed a housing czar for the 7 provinces of China, because if you live in the Pacific Rim, it's not uncommon to live to age 100. And they have millions and billions of people who need housing. So my message to you here, this isn't something that uniquely was contrived by the United States government. It's a worldwide phenomenon. In fact, I recently read by 2035, 25% of the world population will be over the age of 65. There are going to be a whole lot of us. When we go through the program, the most frequent question I get from the audience is, Mike, this sounds too good to be true. What's the catch? Well, one of the problems we have today is, and Gary and I can certainly attest to that, regardless of the sources you go out and reach for, we have a shortage that will last for years and years. In fact, right now we're at a 21-year low of inventory of homes for sale. We're short of buildable lots. We're way short of skilled construction workers, competent appraisers, and most of all, a shortage of affordable homes. The federal government has already raised the bank rate 75 basis points. We're told and conditioned it's going to go up another 75 basis points in September. That's putting pressure on the cost of borrowing money. It's keeping people out of the market to buy a home because you have to have a higher down payment because of the shortage of homes, and it requires a bigger monthly payment. So when we speak about using this program as a sophisticated financial planning tool, it's not just another mortgage, it's a financial planning tool. We're solving a housing need, we're adding money back into the investment pool, we're increasing the client's cash flow, they have a reserve fund, they're fulfilling a housing wish. When Gary and I can put a senior into a single family ranch patio garden style home, maintenance free, brand new, energy efficient, with all the outside work taken care of, that takes a lot of pressure off your shoulders. And when you can have that home without making a payment and have money to put back into the income portion of your life, that's a home run. As I just stated a second ago, we're in a 20-year phenomenon of people working longer, reduced investment income. We're behind on our savings goals based on how long we thought we were going to live. And this number is actually a little stale right now. The average senior is carrying somewhere in the neighborhood of $78,000 to $80,000 of either credit card debt, home equity lines of credit. Why? because the amount of money coming in doesn't match the outflow going out, and they're having to use credit in order to live comfortably. One of the things that's important to realize, this is a federally chartered, federally insured program just for seniors. Just like we talked about, the veterans have their special program, policemen, firemen, teachers. When you have this program working for you, you never give up title to the home. You're never going to owe more than the home is worth, because this is the only loan that is a non-recourse loan. When you sit at the table to sign the mortgage deed and financing note, the only collateral that we in the government have is the value of the home. There is no personal guarantee. For those of you who were paying good attention back in 2006, 8, and 10, you heard the term underwater, short sale, bankruptcy. That's because when the home sold, there wasn't enough proceeds to pay off the investor, the bank, the pension plan. And therefore, they were personally liable, and they went after their personal assets. That cannot happen with this program because it's a non-recourse program insured by HUD and FHA. As long as you pay the tax, you keep it insured, and you maintain it, you can never be made to move. It is not a 30-year mortgage. It's for your lifetime. And being able to preserve that cash flow that would otherwise make a mortgage payment, you need to realize, if you've looked at the amortization schedule on a new loan, for the first 12 to 15 years that you're going to be in that home, a new home or a home that has a mortgage, 60% of that payment goes to interest. You are truly not being able to amortize and reduce the balance, because in the early years, most of that money goes to principal. But you have a legal obligation to make that payment each and every month. I say again that from the standpoint of yourself and your heirs, the fact that this program is non-recourse is extremely important to the financial advisors, to the seniors, and to their family. When you stop to consider that controlling the cost of shelter will consume about 30% of all the after-tax retirement income, that's a huge thing to budget for. The next is health care. We know, don't we, Cheryl, that 75% of people are going to need some level of institutional care prior to death. Speaking for myself, who've got grandchildren and puppies, we all like to spoil their grandkids and have a good time with them. But in addition, we have our own hobbies. We like to travel and have some fun. Every one of us have needs, wants, and wishes. And all of that takes money. Let's see what some other people have to say about this program. A recent survey by the AARP said that 93% of the people who have had this program over the last 34 years would gladly do it again. 89% said, hey, it gave us a better lifestyle. We don't have the pressure we had before. It improved the quality of our life, and 94% said it gave them the peace of mind. And what I say and what keeps me going is it's not just another loan, it's just not another piece of paper, it's not another transaction, it's actually a transformational experience. The purchase program really has a key place because many people here in the Midwest, where we serve our senior clients, are frequently in homes that are 45 or 50 years old. They may have a full basement, a main floor, bedrooms up, maybe a half acre to an acre of ground that they have to keep up. And we all know that if you've been in that home 35, 40 years, you maybe have already put a new roof on. You've had to have a new HAB system. We have a lot of clay soil here in the Midwest, and sometimes you have a leaky basement or foundation walls are crumbling. The point that I'm making is that owning a home is an expense. There's a payment to make, but you also have the maintenance. And where it makes sense, and where it's the desire of the boomer client, we can help them sell that departure home, keep about half of that in their checking account, savings account, investment account, and put the other half into the down payment of a purchase of a condo, a duplex, townhouse, single-family ranch, something that will meet their current financial and future current physical needs. Not climbing stairs, not having to do a lot of maintenance and things like that. All of those things are critically important because, as my grandma used to say, Mike, my get up and go got up and went. And so as a consequence of that, you've got to get it done while you can, both financially and physically. And as Gary and I are wont to say, when you're a senior, time is not your friend. And what I've done for the last 21, 22 years exclusively with this program is simply to put forward proposals for the senior to take a look at, their family, financial advisors, their CPA, their elder law attorney, to whomever they would like to share the information, so that they understand that there are other options besides paying cash, taking on a 30-year mortgage, or perhaps considering one of the HECM programs. The other thing that has happened so very, very often, and it's extremely sad, is that 5, 6, 7 years ago, for whatever reason, the couple will have decided to take on a mortgage as they enter retirement. And things were okay, they were able to make the payment, but then, I call them Bob and Betty, Bob died, which is typically what's going to happen. And most of the women that we serve are going to be in a period of widowhood for about 8 to 10 years. All of a sudden, with the loss of his pension income, with the loss of Social Security, etc., it's a big strain, or perhaps even impossible, for Betty to continue to make that mortgage payment. So the best laid plans that worked okay for 3, 5, or 7 years suddenly blew up. And now all of a sudden, time is not her friend, and we have to go to a plan B. So there are things that we have to be very aware of, speak very frankly, in order to put on the table all the conditions that we're aware of today, those that we are most certain will occur in the future, and how are we going to handle those, and how will that plan look like.
Tom and Sarah are nearing retirement, and the house they've lived in for the past 35 years no longer fits their active adult lifestyle. Although they love living in a home that's paid for, they know that maintaining an aging home will be challenging, not to mention the burden of navigating stairs. So recently, they decided to look into purchasing a new home. The problem is, they haven't been home shopping for over 30 years, and taking out a mortgage while on a fixed income in retirement concerns them. Tom and Sarah know that paying cash for their next home is probably the best purchase strategy, but aren't sure they can get the home they really want using the proceeds from the sale of their existing home. They don't want to tap into their retirement accounts either because they fear running out of money at some point in the future. Tom and Sarah purchased their current home in 1977 for $57,900, and they now own the home free and clear. A trusted realtor in the area told them their house is valued at approximately $486,000. After closing costs and realtor fees, they would net about $448,000 when they sell their home. So, with a budget of $448,000, Tom and Sarah begin the search for their dream home. Tom and Sarah don't always agree on everything, but one thing they do agree on is this. This may be the last home they purchase, and they want it to have things like single-story living, modern design, an upgraded kitchen, outdoor living space, and low maintenance. So, on a sunny Saturday morning, Tom and Sarah map out 3 homes they want to visit. After touring the first home, Sarah asked the sales agent, "How much does this home cost?" "$700,000, ma'am," exclaims the friendly agent. That's a whopping $252,000 over Tom and Sarah's budget. Their dreams quickly turn to disappointment. The friendly sales agent mentions that there's a unique loan program that they should really consider because it was designed just for them. He went on to explain a strategy that middle-income and affluent boomers like Tom and Sarah have been using since 2009 to purchase their dream home. He told them about the Lifestyle Home Loan. What makes this program unique is that it only requires a one-time down payment of about 55% of the price of the home, and then there are no required monthly mortgage payments for the rest of your life. You remain responsible for home maintenance and payments of property taxes, home insurance, and any HOA fees. Tom and Sarah realized that they actually can afford the $700,000 home using this program, and that they are effectively doubling their purchasing power compared to paying cash or taking out a regular mortgage. The new Lifestyle Home Loan is for those ages 62 and up. It's an FHA-insured program that simply requires a one-time down payment of about 55% of the purchase price and does not require a monthly mortgage payment as long as you live in the home. Remember that home maintenance and payment of property taxes and insurance are ongoing program requirements. Discover how you can buy the home you really want without tying up a large portion of your savings. Take the next step and learn more. Contact us today to learn why we are the nation's largest lifestyle home loan lender with loan specialists in 48 states.
Okay, you heard all about what Mike had to offer, and like we work together, we're a team. My name's Gary Rossignol. I'm with RE/MAX Preferred Group, better known as Cincinnati's Rock and Roll Realtor, and I am a senior real estate specialist. So, and if I've heard it once, I've heard it 1,000 times. They're going to carry me out in a pine box. And that's the usual mindset of most seniors who built their home 30 years ago. They raised their children. The kids are grown and gone now. And mom and dad are left with this big house. The 4 bedrooms are on the 2nd floor. The laundry room is in the basement. And it isn't working for them any longer. So they need to make some decisions, some choices. Number one decision is they can find a home that fits their needs, like a patio home. We had Sharon in Westchester. She had a 4-bedroom, 2-story. Laundry room was in the basement. And she didn't have a mortgage, but she needed to do some work on her house. So she got the HECM mortgage, gave her freedom and the funds to do what she needed to do. But then she was faced with surgery. And she called me, she says, Gary, this house isn't going to work for me any longer. I need spinal surgery. I'm going to be in a long-time recovery. I can't go up the steps. I can't go down the steps. So we found her a brand new patio home, and I found an investor to buy her home. She closed out her one HECM mortgage. She used another HECM mortgage to purchase her brand new home, and she bought a $325,000 house and never has to make a mortgage payment, just pays taxes, insurance, and the HOA fees. And she's set for life. She loves her new home, and she loves the freedom, the financial freedom that she has to use. So as a senior real estate specialist, I've been trained by National Association of Realtors to key into the wants and the needs of our senior population. The Senior Real Estate Specialist designation is awarded by the SRES Council and is awarded to realtors who have successfully completed the educational programs and have experience. And the difference between a real estate agent and a realtor is we do have a code of ethics that we follow. I'll tell you a real quick story about Oliver. Oliver has a home out in Eastgate. It's on a lot that he loves. He likes his home. However, the closets are a little bit small, the doorways are getting a little bit small, and he needs to spend about $60,000 or $70,000 to adapt his home to his wants and needs. Well, with the HECM mortgage, he has that freedom, financial freedom, and never has to make a mortgage payment. He can hire the contractors, come in and do the work on his present home and stay put. We call that aging in place. So that's another benefit of having a senior real estate specialist working with you. We can help walk you through the different aspects of aging in place if that's what you want to do. Why ask for my help as a senior real estate specialist? As we get more mature, we require specialists to help maintain our health needs and life possible. And that's what I'm trained to do, is to sit down with you, find out what your wants and needs are. If you really, truly want to stay in your home, but there's some modification that can be done, we can help you through the folks with CARE, Cincinnati Aging Resource Experts. We have people in our group that can help you transition into changing your home into what you want to make it, your house into the home for their future. I call it life after life. The kids, they're gone, and now you're on your second life, and it's going to look a lot different, and it's going to have a lot different needs. And that's what I try to achieve by working with seniors in their life after life. So if you feel a little bit overwhelmed, you might want to meet with me. We can prioritize all the wants and needs of your next phase. We can do some research. We can hire the competent contractors to help you get what you need, sort through all the decisions that you need to make. If you want to sell your home, we can put it on the market. We can get you top dollar. We can help you sell your home and help you buy the next home. And then you can move in and live your life on your terms. And that's the key. Start from being overwhelmed to living your life on your terms. And that's there's 9 steps to that. And my job is to help navigate you through that with all the details and make it easy. What I can do for you is meet with your family, your caregivers, meet with you and help you through walking through all those phases. And my job is to make sure that you are safe. I had one lady call me out. Her husband had passed away about 10 years ago. She had her custom-built home. Her bedroom was on the 2nd floor. I'll call her Marjorie. And she had her 2 little puppy dogs, which she walks every day. She can get up and down the steps perfectly fine. She was 82 years old. She had a social life. She was very busy. And I just asked her, I said, Marjorie, I said, what do you want to do? She says, well, my kids think I should move into something else. I should go into assisted living or something. She says, but I don't want to do that. I says, then don't. You're perfectly fine. I was with her. I saw her go up and down the steps. She's healthy as can be. She has an in-ground pool which she opens every year. She uses it. She takes care of her yard. She's a busy lady. I said, just stay. And she turned to me. She stuck her hand out. She says, young man, she says, don't you ever retire, because if and when I do get ready to sell my house, you're going to be my realtor. You're the most honest person I ever talked to in my life. And that's all we have to offer. Mike and I have an honest approach to your life after life.
I think the thing that's most helpful, Gary, is when we tell stories.
Yes, we do.
And I want to just tell a couple. There are people who have some financial challenges, what we call the MLEs, that they hadn't planned for, and they needed to accommodate a fairly large economic burden. They were living fine up until that event occurred. Gary had a relationship with them. I went out and met with both of them at their home, and we determined that the best action for them was to take out...
Let me tell you the first reaction when I was explaining, because when I was talking to Duke on the phone, he said, well, we got to do this and that. And I says, well, Duke, you have your home paid off, right? He says, well, yeah. I said, you need to meet Mike Bowers. I said, why don't you take advantage of all that equity you have in your home? He says, oh, I don't want to get into another loan. I says, what if you never have to make a mortgage payment? He said, that sounds like a reverse mortgage. I says, well, it used to be called that. He says, no, I don't want to have anything to do with that. I said, what do you know about it? Well, I don't know anything about it.
Yeah.
I said, what you don't know is what's going to hurt you. You need to know what you need to know.
Right.
And Mike will walk you through that. And you did.
I think the story that probably carries as much weight as anything is that I was a founder and shareholder of the previous company that Mutual Omaha bought. This is a 113-year-old company, has millions of policyholders, millions of policies that they insure and guarantee for the benefit of millions of Americans. They wouldn't be involved with a program that wasn't ethical and didn't meet the needs of about 2.5 million of their policyholders,
right,
all of whom are over the age of 65. And that was the genesis of why they bought my company. But beyond coming back to Duke and those folks, when you're retired and you no longer have any current income and some of these major life events occur, MLEs, it's nice to be able to monetize. That's a 55-cent word way down south. When you monetize that locked up equity and turn that into cash coming into your checking account, it solves a lot of problems. A couple of other quick stories. I had a referral from a CPA up in Columbus, and the lady was widowed, but her only relative that she really cared about was a niece. And the lady was her nurse. I forgot to tell you that. She was a retired nurse, an RN. And her niece had spoken to her many times that she also wanted to become a nurse. So the lady, being a widow and in her home and so forth, wasn't able to give her $50,000 or $60,000 for the education. So what she did on the CPA's advice is she took out a reverse mortgage. This gets I just think tremendously inventive. She went ahead and bought a condo in Cincinnati so she could go to UC nursing school. She made the attorney drawed a very tight contract for a 5-year program where the niece would live in the home. She had to have a roommate, and the two of them together would be able to cover the condo fee. And because the lady had the HECM reverse mortgage, she paid cash for the condo. But at the end of 5 years, that young lady had to apply herself and get the nursing degree, because at the end of 5 years, my client was going to sell the condo and get her money back. Not only that, she made some money because the condo had appreciated.
Right.
But absent that tool, absent that financial solution, she would have not been able to help her niece get into that home. I've had a number of clients who have what we call adult dependent children. They're retired, middle 60s, maybe early 70s, and they've got a 38 to 42-year-old adult dependent child that needs care and help. And that this money provides that care and help, and helps mom and dad continue to be the parents that they need and must be for that child.
Right.
So the solutions that we've been able to effect have been very wide, deep, and again, what is so important is just to sit down and listen. What are the needs, what are the wants, and what are the wishes? And sometimes we can help them. Sometimes we can't. But I think the key thing is we're not there to sell something initially and immediately. We're there to listen and to help give them options and choices in concert with the financial advisor, with the elder law attorney, and whoever else is at the table to help make good, judicious decisions.
And I know you would welcome anyone's financial advisor to look over the whole paperwork, you can walk them through the whole process. And I ran it by my financial advisor, and he says, Gary, he said, this is a no-brainer. He said, this is so simple. He said, this is right up your alley. This is exactly what you need. I said, you're absolutely right.
Well, for those people that are skeptical, as I said in the early part of my presentation, 37% of our referrals come from the financial planning community. These are the men and women getting a phone call. Send more money. I have this problem. I need to. I have a lot of the fellows will pound my desk and said, Mike, I got to go buy that third last car.
Yeah.
And now it's $38,000 or $40,000.
Or they want the new boat.
Yeah, well, yeah, all that stuff too. But the bottom line is it's something to be aware of. It's something to analyze and see if it works for you.
Exactly.
That's the bottom line.
So if you are skeptical, if you have any thoughts or any curiosities as to, is this really for me? I would suggest call Mike Bowers. What's your phone number?
For all those people in the tri-state area, it's 800-589-8430, and I'm on extension 310.
There you go. Or you can call me at 513-777-2402, and Mike and I will sit down with you, find out what your needs are, what your wants, and how we can help you. And if we can help you, we will. If not, what about an hour and a half we can spend with you? It's no big deal. We'd be happy to do that. And if there's anything else within the community of Cincinnati Aging Resource Experts that's going to fit your wants and needs, we're there for you. We can introduce you to elder law attorneys, in-home health care, pharmacy assistants, nursing staffs. If you have a lot of junk and stuff, you say, gee, what are we going to do with all our stuff that it might be valuable? We can introduce you to the folks at everything but the house, and you want to get rid of everything else. Jack Brendamore, Junk King, he'll take care of everything else that you have that you need to get rid of. We have a solution for every aspect of your life after life. So don't be afraid to reach out and call us.
It's what I call phone a friend.
There you go. Thank you.